All right, so this is a beautiful evening, and then I welcome everybody to my YouTube channel. It's been a while. I actually upload something on there, and I believe a lot of you guys actually miss me, And I got some message, boss. We've not been seeing a content lately. Now I bring to your table my content now. So today we'll be discussing um market structure. You know, the logic behind my market structure. You guys just see that I mark structure on my Telegram channel. You'd be like, how did this guy cut this trade? What's pumping? So I will be explaining everything here. I'll be explaining everything here. So let's get started to it. All right. So my Forex, let me name it Forex logic. Forex logic. So you see, whenever you're trading Forex, there are rules for do and don'ts. Aside from that, before you mark anything, there are some stuffs that will govern whatsoever you're marking on your structure. Now, when it comes to my logical aspect of trading Forex markets, there is something I call facts and confluence. Facts, and then I have my confluence. And I have confluence, right? You see, under these facts, that is where I have my market structure, I have my supply and demand, and then I have my liquidity. Remember, we take everything one after the other. Structure, supply and demand. Don't mind my writing, no. And liquidity, LQ. And under confluence, this is confluence, short form. And under confluence, don't let me just go there today. We'll discuss about confluence later. Under confluence, that is where we have time and some other stuffs. Let me keep that one for now. So let's focus on today's topic. So today I said I want to discuss market structure with everybody, right? So let's get into it. So structure. Everybody know textbook diagram. I mean the textbook pattern of structure. Textbook will tell you that. Or before then, we have three types of structures. We have the uptrend, which is the bullish market structure. We have the downtrend, which is the bearish, and then we have the ranging market. You can call it consolidating market as well. So, textbook will tell you that uptrend is always like this. High, low, high, low, high, low, which is very right. And then they will tell you that downtrend is always like this. Lower, low, lower, high, lower, low, lower, high, lower, low, lower, high. This is correct. But if the market is moving like this, I believe everybody should make a lot of money. I don't want to use F word. Make a lot of money, in this Forex space. And then for the ranging markets, we have market do something like this. Equal highs, equal low, market keep bouncing up and down, right? Now, you see, whenever, okay, don't let me go to the aspects. When it comes to structure, there are some stuffs that need to be checked before you can admit that this is a proper structure. For example, let's make use of a bullish trend as our example. Coming, let me reduce this guy. Okay, so now let's take a look at this something now. Textbook will tell you that we have high, low, high, low, high, low, right? In as much that this guy pull back to the 50%. Let me change this color. Where am I going to change color here? This is my first time using this color. Okay. In as much that this pullback enter if you measure from this guy to this guy, if it is up to 50%, if you measure from this guy to this guy, and this pullback and this pull back into the 50% of this range. This is what? A complete structure. You understand my point? So whenever it comes to structure, we have a complete structure and an incomplete. Now, let's proceed. Let me change my color to black. So now, this is a swing low, a swing high, another swing low, another swing high, a swing low. If we have market pullback again to 50% and then break structure, we have another what? Another swing low and swing high. Swing high, swing low. But scenario whereby we have market do something like this, high, low, high. So market pull back to 50%, right? If you measure it, if you make use of your VIB, your Fibonacci retracement, use it to measure from this low to this high. If this pullback is up to 50% and then break structure, now we have swing high, swing low, because this low pull back to 50% of this guy, this range. Do you understand? Now we have another swing high, swing low, right? Now our swing high is not confirmed yet in this particular leg. Let me change the color to black. So if the market pull back to somewhere around there and then go up again, do the same thing repeatedly, can we call this guy a swing low? The answer is no. Sorry, that's a mistake. Let me delete this guy. Okay, what I mean is that this is a swing low. We have our swing high, right? Our swing high. Our swing guy somewhere around there. Now, can we call this guy a swing low? The answer is no. Because this pullback is not up to 50% of this range. You understand my point? This pullback is not up to 50% of this range. That is why you will see the market come to somewhere around there and then buy. I hope you understand this simple logic, this simple explanation and structure. Now let's proceed. You see, when it comes to structure, we have major structure and minor structure. We have major structure and then we have our minor structure, right? And then it's also relatable to our external and internal. External, internal, external, internal, external, internal. You get my point? Okay, so now say something. When we have high, low, high, low, high, market do something like this, go up again, stuff like that. This is a major structure. Your major structure should be on a higher time frame. This is a major structure. And for the minor structure, that is when you will see something like this. If you go to lower time frame, let's assume this is 4-hour time frame. This is 4-hour time frame now. Now, if you go to 15-minute or 5-minute time frame, this is what you will see here. Let me use red. You will see something like this. I hope you can see my charts. I mean my board rather. So let's take a look at it. This is a low, right? This is a low, a high, a high, a low, a low. Now, can we say this is a high? Remember what I explained here. This is not a high because this pullback is not up to 50%. Now, we have another break of structure here. This is a fake pullback. It is not up to 50% of this leg. Now, Market pull back again, and this guy enter 50%. So now this place has been confirmed as what? As our high, a swing level, swing point. And then this is what? A swing low, right? Same thing applicable to this guy. We have a swing high, swing low. This is not a swing high yet because it didn't pull back to 50% of this particular candle. And then we have this fake minor pullback, and then markets then give us a 50% market pullback into this 50% level. So which has already confirmed this guy as our swing high, and then this is our swing what? Our swing low. If you understand my point. So that is when we have, we can say we have our internal, internal. You see all these things, all this. Let me change this color to blue. You see all this this minor pullback. These are what? Internal. Can you see it? This is what? Internal. And then for the external, we have this guy as external, 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 external. External to external, internal to internal. You understand my point? External to external, external to external. Then we have our internal to internal, internal to internal. So that is all about market structure. Now, let me furthermore. Regarding the complete and incomplete pullback, whenever we see market do something like this, this is a complete pullback because it is up to 50%, right? A complete pullback. But when you have market do something like this is an incomplete pullback because it is not up to 50% retracement. I will show you on the charts. Incomplete. You understand my point? Incomplete pullback. So that is why you mostly see some cases whereby the market will eventually come back to take out a low and then go up again. So if you can spot a complete pullback and an incomplete pullback in the Forex market and the charts the market is presenting for you, that means you are getting to know how structure really works. Now, let's go to the charts. Let's see some chart examples. Woo! Okay. So in case you've not joined my Telegram channel, do where to join. I want to explain some things here. Okay, let me go to monthly time and weekly time frame. I will tell you this second. Now, this is Euro USD. We can say that this guy is bearish. That is to say, we are selling this guy from monthly time frame. I mean weekly time frame. Now, let's take a look at it. This is a swing high. This is a swing low, right? Now, can we say this high is a swing high? Let's measure with our Fibonacci retracement. From this low to this, from this high to this low, can you see this pullback? It is up to 50. As a matter of fact, more than 50, maybe it should be around 71 and above. Let me see if I can enable this guy. Okay. How can I use percentage? Oof. How can I use percentage, guys? Okay. Level. Okay, yeah. Percentage is there already. Now, see, we have 78% here. So market has already pulled back into the distance level. Let me remove it. I don't like that 78. I mostly use my 0, 50, and then 100. Where is it? Okay. So can you see it now? Market has already pulled back into the discount level of this range, which makes this point what? A complete structure. And then we have a break of structure here. Now, we have a swing high and a swing low. Let's check if this market pull back into the 50% again. Measure from this guy to this guy. Can you see it? It's entered the 50%, the discount level of this Fibonacci retracement of this particular range, which validates this guy as what? As a swing, which validates this low as a swing what? Swing point. Now, we have another swing high here because it's pulled back to 50%. Let's measure again. Now, you see, when market pull back into this 50% retracement, we have another break of structure here. This is the break of structure, not this one. Let me draw something out for you. We have a low, a high, a low. So this is a break of structure. Market pull back. This is another break of structure. If market now do something like this, this is our break of structure, not this. Not this guy. This guy only happened internally. So we can say this is our swing high, our swing low, our swing high, our swing low. We have our swing high here, not this guy. Don't make a mistake here, not this guy. You understand my point? Now I'm done with that prime. Now we have another swing high here. This is not a swing low and this is not a swing high. Internally, you can say it is your swing low and swing high, but based on this major structure that we are looking at this present time, this is not our swing high and this is not our swing low. Now let us measure this guy. Now, this is after the break of structure. This is the first pullback, isn't it? You know, we have high, low, high, low. We have another, okay, high, low, high, low, high, low. And this is the first pullback after this break of market structure, right? And then market come back again to this guy. Now let us measure this guy. From this swing high to swing low, is this up to 50% retracement? Take a look at it. Can you see? This guy did not pull back into this 50%, which makes this particular structure what? An incomplete pullback. This is an incomplete pullback. I won't be surprised later in the future, market can just come here, and then drop. Can just come here and drop based on what the market is presenting at this present moment. You understand my point? Now let us go to same thing. See, let me tell you something. What is happening on the major structure is the same thing happening on the minor structure. The same thing. The only difference is what is the time frame. What is happening on 4 hour is the same thing happening on 1 minute, on 3 minutes, on 5 minutes. I mean, when it comes to marking your structure, you get my point now. Now let's go to, let me delete this guy. Let's go to 4 hour time frame. You all know that I love Euro USD. Euro USD. That is my favorite pair. Euro USD. Okay. So let's take a look at this guy. See all these things. See all this stats. See this guy. We have a swing high. I won't start from here. We have a swing high, right? And we have what? A swing low. We have another swing high, and then what? Another swing low. These are the major points, the major structure. Major high, major low, major high, major low. And internally, can you see? We have a minor structure. Let me change the color. Let me change the color of this guy. Let me change it to red. And can you see yellow? We have this minor structure, minor structure, minor structure. Can you see? Minor structure. And in every market trend, we always have what? Impulsive and correct. Is it correction? Or be corrective? Impulsive, correct. I don't know. Well, I hope you understand. Impulsive correction. Yes, correction. Now, we can say this is our what? Impulsive movements, correction movements, impulsive. This should be our correction to give us another nilo, but it only came back and then break this guy. Then give us swing low again, a correction, impulsive, correction. So that is how this is how it works. Now, just like what I explained, we have all these guys as our what? These are the internal structure. If you go to lesser time frame, maybe 2-hour time frame, you will see it there. You will see it. Can you see? You see how very rough? Can you see it? Market came back, cleared everything out, and then sold off and dropped massively. You understand? Now let's take a look at this guy now. Let's see something here. Let me delete this guy. Now we have a swing point here based on this 2-hour time frame. We have this swing high, right? Where is the swing low? Now we have internally, we have this break of structure here. And this is the first pullback after the break of structure, right? Now let us measure. Is it up to 50%? Yes, right? So this is a complete pullback, but market came back to fill an FVG. If you go to lower, if I go to 30 minutes or 1 hour time frame, there is an FVG here, but I won't be able to go there based on this. I think based on this 1,000 beginning candle. This is not premium trading view, premium rather, or anything. So market came back, raided every liquidity here, and then dropped massively. Now we have another break of structure here, right? And then we have this pullback. This is the pullback, right? Now let us measure from this guy to this low. Is this up to 50%? No. This is an incomplete pullback. What about to this guy, right? So market needs to come and take out this liquidity. I don't want to talk about liquidity now, but there's no way I won't be able to talk about it. But then I hope you understand what I mean. So market have to come back to take this level out, because if you measure from this low, from this point to this point, this is an incomplete pullback, right? So market came back to take it out, pull back into this range, and then drop massively. Now we have another what? Another break of structure here. Now, after this break of structure, where is the first pullback? This is the first pullback, isn't it? Now let us measure from this guy to this low. Is this a complete or an incomplete pullback? This is an incomplete pullback, isn't it? Now see what the market did. Markets came back into this 50%. Can you see it? Into the 50%. See this guy too. Market came back. Market will definitely come back here. It might not reach this particular extreme level, but it must get to that 50% before it eventually drops. Right? You see how it happens? It happens over and over and over and over again. Over and over and over and over again. I would have actually talked on money transfer here. Now, as soon as market broke this particular level, we shouldn't be looking for sell anymore. We should be looking for buy. That is why you see that markets come back to this guy and then, oh, what am I doing? Market came back to this guy and then went up. Went up. Can you see it? Now, we have another break of structure here, right? Another break of market structure. We have this pullback. This is the first pullback, right? Let's see. Is it up to 50% if you measure from this guy to this guy? You see, this first pullback is not up to 50%, isn't it? But what did you see that the market did? Market came back into this 50% range and then went up. Can you see it? It happens over and over again. Let's go to the current move on Euro USD. Let me use that guide to explain it in case you want to. So once you watch this video, ensure you go on your charts, try to spot all these things out. This will be the end of the. Let me just explain this one and then record the video from here. Now, let's see this guy now. We have a swing high, right? And then a swing high. This is our This is a break of structure. If I'm not mistaken, it should be somewhere around there. This is a break of structure, right? And the market pull back. If we go to lesser time frame, this place will be very, very clear. If I go to 15 minutes, it will be very, very, I'm very sure of it. But I want to explain something here on 4-hour time frame before I go to, I said something that's major structure. Now look at this guy now. See this 4-hour time frame. It is very clean. So whenever you are doing your market structure, higher time frame will give you the clearer picture of the market. Did you understand? To give you the clearer, excuse me, to give you the clearer picture of the market. Now, if I go to lower time frame, let me expand this guy. If I go to lower time frame here, you will see all this internal structure. Let me go to 15 minutes. Let's see what is happening on 15 minutes. Can you see it? Can you see the minor structures? These are the minor structures. See, can you see? Can you see what I explained? So these are the minor structure. You see, another boom, boom. See something. You see all the noise. These are the minor structures, but the major structure are the one I showed you. I said something. I said internal to internal, external. Now see, this is an external, right? Internal, external, 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 internal, right? So if you take a look at this thing, internal, inside, external, outside, 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 this is inside. I mean, this is inside. I was actually pointing at my screen, thinking that you guys were watching me, but no. Oh, good. So we have this guy. It is outside. This is external. This is external. This is internal. Internal to internal, external to external. You understand it? So let's go to that 4-hour again. I was actually explaining something on 4-hour time frame. Now, take a look at this guy now. We can say this is what? This is the first pullback, which is not up to 50%. Let's measure it. From this guy to this guy. It's not up to 50%, isn't it? Let's extend it to the future. Even this guy did not even pull back to 50%, which makes this guy what? An incomplete pullback. Right? Let's proceed. Now, we have this guy again. Let's measure. Remember, guys, I dropped this setup that the market will sell from somewhere around there, and then this will be our TP target. Even though market did some, oh God, don't let me talk about it. But a lot of people most of you that watch my video should know that I dropped this setup. The market is coming here, and then it will come and take out this internal liquidity. I said it. So let's proceed. That's not the topic for today. Now, let's measure again. From this point to this low, is it up to 50%? No. But what did you see the market do? Markets eventually come back to this 50% Fibonacci retracement and then drop. Even if you extend it to the future, you see, it entered the 50%. Which makes this guy what? A complete pullback. So we can say this is what? A swing high, a swing low, another swing high. And this is a swing low. Now let's check this guy. From this guy to this guy, is he up to 50%? This is the 50%. The market has already pulled back into the 50% and is dropping right now. It's dropping massively right now. See, everything that is happening on higher time frame is the same thing happening on lower time frame. I've said this before. Let's go to, you all know my favorite time frame, which is 5 minutes. I love that guy. I love 5 minutes time frame, Let me say something. I remember I sent a setup to someone. The guy was like, guy, I was actually in love with 1 minute. I love 1 minute then. The guy was like, guy, I'm very sure you are 1 minute guy. You are 1 minute guy. That was really funny. But then let's proceed. Hey, I love what I'm saying. Yes, let's take a look at something, guys. Let's take a look at this. Is very, very interesting. I love something like this. This is a swing low, right? This is a swing low, and then this is a swing high, somewhere around here. Now let us measure this particular pullback. Is it up to 50%? Let's go. Can you see it? It is up to 50%. So that makes this guy a what? A swing low. And then we have another what? Another break of market structure here. We have our swing low here, and then what happened again? Market broke. We have a swing high again, right? Market pull back to 50% again, which makes this guy what? Another swing what? Another swing low. We have this break of structure again. Then we have what? We have our swing high, right? Let us measure this pullback. Is it up to 50%? From this low, okay, from this low to this high, can you see? This is up to 50%, which makes this guy what? Our what? Our swing points. This is our swing point here. Our major structure. This is, on 50, let me tell you something. On 4-hour time frame, there is major and minor structure. On 5 minutes, there is major and minor structure. See all the noise that happened there. All these are internal. These are the internal and they are minor. If you go to lesser time frame again, you will see them. Very small, minor structures. Now, we have another swing low here, right? And then market broke this guy. A swing low, a swing high. When the market broke structure, let's check. Is this pullback off to, what am I saying? Is this pullback up to 50%? Yes. Can you see it? This is a swing low. Now let's proceed. We have what? A swing high, a swing low, isn't it? We have another swing high. This pullback is up to 50%. Let's check, guys. This is an incomplete pullback, right? So we should be expecting the market to come to somewhere around there. I actually marked this guy out. I was expecting a buy entry somewhere around there. I'm not sure if I can get the something. But market violated it. Immediately market violated this guy. I knew we are ready to sell. I knew we are ready to sell here. I even have the setup. I sent it to someone. I knew we are ready to sell somewhere around there. I knew it. I'm not sure I even wait for any confirmation. I knew this guy is coming to come and tap this guy and then it's going to drop massively, which eventually happened. But I wait for my confirmation. That was why I got in on this particular sell. So that is all on today's section. So guys, go on your charts, check it very well. Now, okay, before I end the video, let me explain something here. We have a swing high here. And then this is our what? Our swing low. Not this one. Let's measure this guy from this point to this point. Market eventually came back to this 50%. Can you see? 50%. Even if you don't know how to trade, you can be using your Fibonacci. Just place your entry at this 50%. At this 50%, put your stop loss at the protected level and then launch it. Imagine that you don't know how to trade and then this 50%, you are just using this 50% scope to take this trade. Imagine the amount of money you would have actually bashed on this trade. Just imagine. Vivid imagination. Imagine, guys, see something. This is about 1:13. Just 50%. And then the market dropped massively. You understand my point? So that is all on today's class. Okay, let me quickly. I don't want to do chart breakdown. I don't want to do chart breakdown. So that is all for today's class. I will see you in my next video, guys. I'll see you in my next video. That is all for today. Oh, stop. Stop recording.